All right, welcome to The Explainer. Today, we're doing something a little different. We're going to decode the entire future of a company, Uber, by digging into just one single massive financial bet.
So this is the number right at the heart of our whole story today. Almost $133 million. Now, that's what's called the notional value, which basically means it's the total value of the stock being controlled by this one trade. I mean, a bet this big? You just can't ignore it.
And here's where it gets really interesting, right? This massive bet was made at the exact moment Uber stock was taking a nosedive after their earnings report. Think about that. Almost everyone was selling, getting out, but this one giant investor, this whale, went all in. So the big question is, why? Well, that's exactly what we're going to figure out.
Okay, so let's get right into it. We're going to treat this whole thing like a detective story, right? We're going to break it down clue by clue and find out what this big investor saw that pretty much everyone else missed.
First things first, let's be clear about what we're dealing with here. This isn't some random person buying a few shares. No, this is what the pros call unusual options activity. And that's basically a giant flashing sign that institutional players, the smart money, are placing a huge confident bet on where they think Uber's going.
Okay, let's get into the nitty-gritty of how this trade actually works. What this trader did was sell over 20,000 put options. Now, the easiest way to think about this is that they were basically selling an insurance policy on Uber's stock. They collected a cool $1.2 million in cash right up front. And in return, they promised to buy Uber stock at $65 a share if it drops below that price before March 2026. So what they're really betting on big time is that Uber's stock is going to stay above $65. This is a huge, confident, bullish statement.
And that brings us to our very first clue. And you know what? It was hiding in plain sight. It's in the exact same earnings report that sent everyone else running for the exits. So what on earth did this trader see that the rest of the market completely missed?
And wow, this slide just says it all, doesn't it? You have two totally different stories here. On one hand, you've got the market, which saw the headline. Net income plummets 96% and just smashed the sell button, total panic. But the whale, the smart money, they looked right past that scary headline and focused on a completely different number, free cash flow. And that number wasn't down, it was up a whopping 65%.
So here's the absolute key takeaway. That terrifying 96% drop, it had literally nothing to do with Uber's actual business. Not the rides, not the food deliveries, nothing. It was just a paper loss from revaluing some of Uber's other investments. You can think of it as just accounting noise, something that looks bad on paper but doesn't affect the cash in the bank.
And while everyone was freaking out about that accounting noise, the numbers that actually show how healthy the business is, well, they were absolutely on fire. Gross bookings, profits, and especially that free cash flow number we talked about, all of them were rocketing upwards. I mean, on this path, Uber is on track to generate something like $10 billion in free cash in 2025 alone. This isn't just a company that's growing anymore, it's turning into an absolute cash-generating machine.
All right, so let's move on to clue number 2, because this is where the story starts to get even bigger. You see, this massive bet wasn't just about how Uber's doing today. It was a bet on their future. And a huge signal about that future just came from a big change in leadership.
So Uber just made Balaji Krishnamurthy their new chief financial officer. And look, this isn't just some boring corporate shuffle. This guy is plugged deep into the world of autonomous vehicles. He's on the board of an AV trucking company, and he's on record calling autonomous tech a multi-trillion-dollar opportunity. You don't put an AV guy in charge of the company's entire finances unless you're sending a message. And that message is crystal clear.
And this hire points directly to their incredibly smart, low-risk game plan for that autonomous future. They call it the Marriott model. And what does that mean? Well, think about Marriott hotels. They don't own all the buildings, right? Uber wants to do the same thing. They have zero interest in the incredibly expensive, high-risk business of actually building fleets of robo-taxis.
It's a really brilliant three-step plan. Step 1, Uber brings the brand and the customers, all 202 million of them. That's their huge advantage. Step 2, they let partners, guys like Waymo and others, handle the expensive part, owning and operating the robo-taxis. And step 3, Uber becomes the essential platform, the software, the network that powers the entire thing. They don't want to be the car company, they want to be the operating system for all transportation. Genius.
Okay, time for our third and final clue. And for this one, we have to go back to the scene of the crime, so to speak. We have to look at the price itself.
Why $65? Why that specific number? Well, let me tell you, it was not a random choice, not at all.
This is why $65 is basically a fortress for Uber stock. First off, it's really close to its lowest point in the last year. But more importantly, it's a level where a key technical indicator screams oversold. Now, all that really means is that it's a point where historically, all the sellers are exhausted and the stock is primed for a bounce. It's what traders call the point of maximum pessimism, which is, ironically, the absolute perfect time to make a bold bet in the other direction.
So, think about it. This trader basically found this incredibly strong support level for the stock, a real line in the sand, and said, I bet you $133 million it won't cross this line. And for making that bet, they got paid over $1 million up front. That's about as high conviction as it gets.
Okay, so we've laid out all the evidence. We've got the financial clues, the strategic clues, and the technical clues. I think it's time we put it all together and solve this $133 million mystery once and for all.
The case is pretty compelling when you lay it all out, isn't it? Clue number one, this trader ignored the panic and saw a business that was just gushing free cash flow. Clue number two, they saw a clear, low-risk plan to basically own the future of autonomous transport. And clue number three, they picked their spot perfectly, making this huge bet at a price level that was like a fortress. It all adds up.
But of course, no bet is ever a guaranteed win, right? You have to look at the risks. The bears, the people betting against Uber, they'll tell you that huge competitors like Waymo and Tesla could just build their own ride-hailing networks and cut Uber out completely. And, there's always the looming threat of more government regulation.
Ultimately, though, a bet of this size boils down to one core belief, and it's this: the idea that Uber's enormous network of users, combined with its powerhouse cash generation, creates a competitive advantage, a deep, wide moat around its business that is just almost impossible for anyone else to cross.
So, what started out as just a financial mystery, a big number on a screen, has really turned into this powerful story. It's a story about seeing through all the short-term market noise and focusing on a long-term vision. A vision of a company flush with cash, positioning itself to be at the very center of the next wave of transportation. And that leaves us with one final, big question to chew on. Could this one trade, this single $133 million bet, be the single loudest signal we have for the entire future of how we all get from point A to point B?